Hi guys. Hey, this is our first recording for chapter 7. I think I'm just going to get through the first 7.1 module. So there's a learning objective, skip through that. So I only have 15 minutes, so I'll try to get through it, maybe even quicker. So this chapter's on payroll. It's going to be kind of exciting, a new change of pace. Payroll is interesting and important for beginning accountants to know because a lot of times that's where you get your first job. So payroll is complicated because, of course, it involves with the government, state and federal, and it is a big deal because you're dealing with people's paychecks. So here's a little graphic of the payroll process. This is actually in your book, and we'll learn most of these steps. We're going to start out with actually figuring out how to calculate, basic payroll things. So payroll has to be accurate. If somebody makes a mistake on your paycheck, you'd be mad. So another thing is payroll needs to be on time. You have to obey federal and state laws, and of course, payroll is also confidential. So here's some important things, more meaty items in the chapter. Uh, you can pay people hourly, or you can pay, by a salary. And typically a salary is, sometimes it's biweekly, you're paid every 2 weeks, or sometimes it's once a month. Pay period can start on any day of the week. It doesn't matter if it starts on a Tuesday and ends on a Monday, so you work, certain days. Um, and that is going to be important as we go through this chapter. So the first thing I'm going to do is to show you how to calculate gross pay, and then we'll look at payroll deductions, including income tax, federal income tax withholding, state income tax withholding, and then Social Security, which is FICA or OASDI, and then calculating net pay. It's a little bit of math, so we're just going to do 7.1 for this video. So to start with, your regular earnings are calculated, basically your hours times how much you get paid. If you do get paid overtime, according to Fair Labor Standards Act, you have to be paid at least time and a half. And for this class and your calculations, anytime you make over 40, you work over 40 hours a week, anything over 40 is going to be time and a half. So that's how we'll calculate it for this class. You got to remember that because it might not be the same where you work, but that's how it's going to be calculated for this class. Remember, agriculture is a little bit different too. Just recently, we've had some laws change on what overtime that farm workers have to be paid overtime. So it's a little bit different, but the concept of calculating overtime and gross earnings it's all the same. So just remember, anything over 40 hours can be paid at time and a half. Okay, so here's a start of an individual, and this person, their first week they work 44 hours, the second week they work 38 hours. So on a payroll register, it looks something like this: 40 hours regular, 4 hours of overtime for a total of 44. You would be paid for 4 hours of overtime here. Okay. The second week, they work 38 hours, 0 hours of overtime for a total of 38. Okay. So don't think that it should be 80 hours total and you get 2 hours of overtime. Anytime you work over 40 hours, you get paid overtime. And overtime is always going to be calculated at time and a half. So they have a very complicated explanation here, but you can kind of take a look at it. They do two different ways. And so your pay rate is $11.40. That's your, your base rate, your regular rate. So they're showing you how to calculate overtime. So usually I do it this way, the top way here. So if it's 11.40 is your regular hourly rate times time and a half would be $17.10 per hour is your overtime rate. So that person would have earned 4 hours of overtime times $17.10. Their overtime rate is $68.40. And then the regular hours, they would have had 78 regular hours at $11.40, so $889.20 for regular earnings. add those two together, and that is the gross earnings. And then they show another way, but I'm not going to go over that. This is the easiest way. Just remember to calculate your overtime rate. It's your regular rate times 1.5. Okay. Okay, so let's talk a little bit about withholding. So withholding is basically money that's taken out of your paycheck. And every one of you that's ever worked and been paid legitimately has had income tax taken out of your paycheck, because that's how you get your tax refund, your income tax refund. So that's your federal income tax withholding. Remember that whole thing there. So federal income tax, and then you also have state income tax, and there's other things too. So typically, to determine how much you have taken out of your paycheck for your federal income tax withholding, you complete a W-4 form. And I know you've done this before if you have worked in a regular job. And that determines how much taxes will be taken out of your paycheck. And to do that, the way that it's done is you have to list your marital status, single or married. Those are your two options. It's not complicated, unlike some other things. And how many total allowances or dependents you are going to claim on that paycheck. And that would be how many people are dependent on that paycheck. So that's what a W-4 form looks like. I know you've seen this before. And so you would claim single, one dependent, or married, one dependent, or you can be married but withholding at a single rate if you want to have more taxes withheld from your paycheck. So those are your choices. And that determines how much tax is taken out of your paycheck. So when you're calculating payroll, that's one of the first deductions we have to calculate. Okay, so like we said, federal income tax withholding is determined by your marital status, your number of allowances, your gross pay, and your pay period length. So you have, the IRS gives these wage tax bracket tables, and those are in your book. And those are the ones they will provide you with when you do your homework. You'll look at a table. And the table looks a little bit like this. So the way this works, kind of important you pay attention here. Let's see, what was her gross? I can't remember. Her gross pay was $957.60. And she's claiming single, one dependent. So this is going to be her single tax table, biweekly payroll period. She's going to claim single, one dependent, and it was $957.60. So it was somewhere between $940, at least $940, but less than $960. Single, one dependent. So she's going to have $89 withheld for his federal income tax from her paycheck. If she claims more dependents, more people are dependent on that paycheck, less money is taken out of her paycheck. If she claims less dependents, like 0, then she has more money taken out of her paycheck. Okay, so just remember, single, one dependent, she made between $940 and $960. Go over here and we find the amount that would be withheld from her paycheck for her federal withholding. Okay, and here's a page. This page is actually in your book, and so you can see that it goes through every quantity of wages for a biweekly payroll period. So another income tax that is withheld is state income tax. So state income tax is basically for our state of California. Some states do not have state income tax. So that's why people move to those states sometimes. But remember, if you make your money in California, you're going to pay income tax on it no matter what. So there are several states that don't have state income tax. You can see our close neighbor, Nevada, doesn't have any state income tax. So the state has the same type of tax tables as the federal withholding. The good news is, listen carefully, the book will never have you use a tax table to calculate state income tax withholding. Instead, they will give you a percentage. They'll say 10% for state income tax withholding, and you'll calculate that off of their gross pay. Or they'll just give you the amount for state income tax withholding. Okay, some other income tax withholding. This is just for your information. There are no problems that have other income tax withholding. But some states do have their own income tax withholding. So another thing, this is probably the most complicated. Hopefully I can get through it in 5 minutes. That's about all the time I have left. Is Social Security. So Social Security is basically it's a federal, old age pension plan, and employers are required to withhold money from your paycheck and put it in that quote unquote Social Security or pension plan. And the employers also have to match the amount that they take out of your paycheck. Okay, so you'll see Social Security is called FICA sometimes. That stands for Federal Insurance Contribution Act. Okay, so there's a lot of things about Social Security that you're all young, you probably don't care about it too much. But you may receive benefits if you had a parent who paid into Social Security and then passed away or became deceased. Then you would receive Social Security benefits, I believe, until you're 21 years old. So let's go into the nuts and bolts of Social Security. So what you need to remember is Social Security is really two taxes. And the taxes, remember, this is called FICA. The two taxes are called OASDI. This is like your old age pension plan, and Medicare. And Medicare is medical insurance for older people. So remember that each tax is calculated differently. OASDI has a wage-based limit. It puts a limit on the amount of taxes that an employee has to pay. Medicare, every dime you make, whether you make $1 million or $5, Medicare tax is always taken out of your paycheck. OASDI, once you reach a wage limit, you do not have to have that taken out of your paycheck any longer. So here's the numbers you need to remember. So Social Security, OASDI is 6.2% of your gross income. That is how much is taken out of your paycheck. Okay? Medicare is 1.45%. And remember, your employer also matches whatever you have taken out of your paycheck, the employer matches it. Medicare has, I have to move my face here. Medicare has, or Social Security, OASDI, careful, OASDI, this one, has a wage-based limit of $127,200. So if you make more than $127,200, you do not have to pay OASDI, this 6.2%. I'm not sick, I'm just coughing. Okay, oops, come on, next slide. Okay, so here's an example of calculations of gross earnings. Oh, there's some other withholdings. These are always going to be given to you. So here's your gross earnings. Federal income tax is done from your W-4. State income tax is going to be a percentage that's going to be given to you. OASDI is going to be that 6.2% of your gross. Medicare is 1.45%. And medical insurance is going to be given to you for total deductions of $271. This is your gross pay. These are your deductions. That's your net pay. Okay, I'm going to stop there, and we're going to give you a homework assignment, see if you can figure out some of this stuff. Okay, talk to you later.